Hi, it's pretty hard to find a cryptocurrency that's going up recently. We see a lot of losers, -5%, -10%. That's not uncommon for the last 24 hours. Near Protocol is one of the top losers, currently at -11% in the last 24 hours. This is a big crash we see in almost all of the cryptocurrencies. And so Near Protocol currently is at $9.62 with a market rank of 40 and a market cap of approximately 5 billion. Now, does it make sense to buy this dip? Because we've come down quite a long way. Here, this is the long-term US dollar chart. We have seen prices of more than 12 US dollars. Right now, we are down by 22%. So does it make sense to buy this right now? Now, in order to answer this question, we will not look at the US dollar chart. We will instead look at relative valuations to Bitcoin and to Ethereum. And that's because of the high correlation of altcoins to the general crypto market. What does high correlation mean? It means when Bitcoin or Ethereum goes down, everything else goes down as well, or almost everything else. So there's a high likelihood that when you're in alts and the two dominant players go down, that your altcoin goes down as well. So really what you want to look at when assessing an altcoin is the relative performance to Bitcoin and to Ethereum. Because say when your altcoin over the long term outperforms those two assets, then it does make sense to take on more risk, right? Bitcoin and Ethereum are the least risky of the cryptocurrencies. They've got the largest market cap. And so the lower you go with the market cap, the lower you go on this ranking, the more risk you potentially take. And that's all fine in case your risk really gets compensated, in case you do outperform. And so instead of looking now at the US dollar chart, let's look at the Near Protocol chart versus Bitcoin. And what we see here, and this is not specific to Near Protocol, is an initial dump, right? An initial sell-off once the asset gets openly traded. But since then, we've seen quite a bit of outperformance. Now, I'm not going into the fundamentals of that outperformance. On this channel, we mainly look at charts. We mainly look at outperformance and chart patterns. We do technical analysis here. But simply checking the outperformance versus Bitcoin, since beginning of the year, Near Protocol has made a 3.3x or a 230% outperformance. And that's what you should expect with your altcoin. You should expect an outperformance versus Bitcoin since beginning of the year. And that's because since beginning of the year, Bitcoin dominance is falling. So Bitcoin as a fraction of all of crypto, it went from more than 70% down to currently 43%. So when Bitcoin becomes less important as a fraction of all of crypto, that means that the altcoins, they gain ground. And so your altcoin should also gain ground against Bitcoin. That's what the general market has done. And so we can see this with Near Protocol, and that's in general a good thing. Now, comparing Near Protocol to Ethereum shows a little bit of a different picture. These are lines I've drawn back in an older video. And here the outperformance versus Ethereum is not that clear. And it really depends on, do you think this is a sideways trading range or do you think this is a long-term downtrend? You can interpret this both ways, but it almost doesn't matter that much because unless you don't have strong fundamental reasons, a strong fundamental thesis to invest in Near Protocol, if you're investing mainly based on momentum, then this doesn't look incredibly cheap, right? If we stay in that range, we could see a potential outperformance versus Ethereum of like 70%. But if we don't, we could also go down by 64% or even more, 70%, however you want to draw this line. So I'm not really a fan of buying over here in the chart, right? It does make way more sense to try to buy after a decent sell-off, which of course, psychologically speaking, is way harder because a lot of people, they won't believe in a crypto asset when it has fallen in relative valuation by around 80% or so. So it's way harder psychologically to buy over here than to buy over here. But still, that's what you should attempt at least to try to do. So of course, this is only one side of the equation, right? This is only technical analysis. We are not looking at the fundamentals. But there's one more thing to consider, and that's the general crypto market. Because in the end, you probably do want to make US dollar gains, right? In the end, you want to gain purchasing power. And that's better measured in US dollars than say in Bitcoin or in Ethereum. So you are dependent on the general crypto market to go up somewhat. And that's currently the problem. The problem is that the actively traded large caps, they tend to turn around. They tend to move bearish now. And of course, you can be very optimistic about this and you can kind of dismiss what is going on here and simply follow what most people on YouTube currently say, that we will move to say 10K in Ethereum by end of the year or to 100K in Bitcoin. But I think it does make sense to be somewhat cautious. And the reason why I say this is because of two moving averages, the 23 and the 39-day moving average. The 23 we have just crossed. The 39-day moving average, we haven't yet had a daily close below it, but simply if we stay at the current level, we will have that daily close below the 39-day moving average. And the reason why those two moving averages matter is because when you backtest this, when you backtest a strategy where you exit the market whenever we fall below the moving average and we are in cash, and we enter the market whenever we are above the moving average, so we follow the price movements. When you follow that strategy, then you find out that the 23-day moving average and the 39-day moving average, they historically work the best for trading Ethereum. So that's why those two moving averages, they are important. They return the most and they also limit the risk the best, the downside risk. Because that's really what you're doing when you exit the market when momentum turns bearish, right? You limit your downside risk, but you are in the market whenever times tend to turn bullish. And so that's why I think it does make sense to be careful now. Of course, the strategy doesn't work perfectly, right? When we look at the past, we did have signals where we exited the market and then we enter again for a very similar price. But we do have times, for example, over here in May, where I also made a video about the market potentially turning bearish, where we did see quite a bit of a drop. So when you exit over here, say in the middle of those two moving averages, and then you re-enter again, once we cross above, you would have saved yourself a loss of 34%. Now, 34% doesn't sound that much, at least in crypto terms, especially when this kind of risk reduction is not safe, right? You might just overtrade and go in and out of the market all the time. But this does matter when you look at altcoins. So let's just look at this. This is the 19th of May and the 23rd of July. Let's look at this in Near Protocol, 19th of May to 23rd of July. That's almost 60% negative. So in altcoins, you do have inherent leverage. The smaller your altcoin, the smaller the market cap of your altcoin, the more it tends to move in both directions. When it goes down, it crashes more. When it goes up, it rises more. And so that's why timing the market while looking at the general Ethereum trend does make sense. You really don't want to be in the market when we go down 60%. It's not that easy to recoup a loss like this. Of course, when times turn bullish again, that's easily possible, but why not save yourself of such a loss and then re-enter the market with way more capital? That's at least the way I approach this. I think it does make sense, even for solid projects, even for projects that you're fundamentally convinced of, even for those kinds of investments. I do think it does make sense to look at the general momentum. And of course, nobody has a crystal ball. This signal here isn't perfect either. This can be very much wrong, but simply by backtesting, this is the best we've got to determine relative trends, to determine relative momentum. And this does not look pretty right now. So that's the reason why I think it does make sense to be risk off and to currently not buy the dip for Near Protocol, to rather wait a little bit and get back in once we found a floor, once the market shakeout is completely over. If you enjoyed this video, please give this a like. YouTube will then help to grow the channel. And if you haven't yet, feel free to subscribe as well. I publish videos regularly. Last but not least, we've got a Telegram channel, the Bitcoin Strategy channel. Feel free to join us. We are more than 1,000 people over there now. You can simply search within the Telegram app for Bitcoin Strategy channel, or you can click the link in the video description. See you next time. Bye-bye.